Hello and welcome everyone to Silver Asset of the Day for the 23rd of July 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to be aware of? Well, first of all, in the last week here, with respect to hedge funds and money manager positions, we have seen an increase in several of the metals in terms of the overall net long position. Silver, interestingly, we saw no change. So overall, from hedge funds who have a position on right now, 70% are long this market. We identified with you on the week ahead commodity report, really big opportunities here with silver. If we were to see a dip back below $25 per ounce, that would be a great opportunity and gift to buy further positions. We've done exactly that over the course of this week. We've built further positions into silver at lower prices. We've done the same on platinum. We've done the same on copper, which have all now had that slingshot move higher later on in the week, following on from the European Central Bank announcement, where they have pledged to keep interest rates lower for longer and continue to provide stimulus to fight the global COVID-19 pandemic. So with that, we've seen metals benefit off the back of that. We've seen the dollar under pressure. The gold-silver ratio has started to roll over the last couple of sessions as well. It's trading back at 71 to 1. So what you'd want to see for silver in the short term to outperform gold would be the gold-silver ratio to break back down lower, because recently gold has been outperforming silver. We talked you through that trade setup, an opportunity over the last couple of weeks since the beginning of July to be buying into gold as we move into a new quarter at that 1750 handle. That worked out extremely well. Gold prices, they're still trading above 1800. And in fact, this week as well, we talked you through on Gold Asset of the Day, opportunities to buy gold if we saw another revisit back towards the 1790 handle. So on Thursday, before the European Central Bank announcement, gold hit 1792. And then later on in the session, back trading at 1,807 US dollars per ounce. So I hope you caught that opportunity as well. Nice, fast opportunities to be nimble this week. As you know, commodities, they don't move up in a straight line. They will zigzag. You want to take advantage of these sell-offs. We've seen the same this week with palladium. Now had over 1,000-point move to the upside since it broke down at the beginning of the week, back down to retest the 2,600 zone. Right now, palladium is trading back at 2,700. We've also seen some really strong moves over the last week here with platinum. As we mentioned last week, we booked 2,300 points profit on platinum. So for every one lot that you trade, that's $23,000 of profit. For every 10 lot contract that you would trade, that's $230,000 of profit. And then by booking those profits, we've been able to buy back in again on the dips this week. And yet again, we're seeing that breakout to the upside as we get towards the end of the week. And we're also seeing the dollar start to roll over here as well. So with the dollar under pressure and gold-silver ratio rolling back over, this is actually a great setup moving forward for silver to start forming a basing formation, finding support underneath $25 per ounce and starting to build that momentum now into next week, where we have the FOMC statement. That is going to be a major market mover. So that's next Wednesday, where you're going to have the FOMC statement and then Jerome Powell speaking as well. And then the week after that, we have non-farm payroll data. So these news items, of course, can be catalysts for big moves in the market that you do not want to miss out on. What we've tended to see lately with the current volatility is a lot of traders out there, they're getting chopped up, particularly where they're using outdated technical strategies, where they're getting really ultra bearish, especially on commodities and metals, that end up selling right as the market is about to capitulate to the upside, or they end up buying in too high just as the market is about to dump lower. This is the product of many traders being taught very delayed confirmations in the way that they trade, in the technical indicators they use, where they're using outdated gimmicky strategies which just do not work in these market conditions. What you want to be utilizing is a professional, research-driven approach to the market, where you are trading the same way that the professionals do. Trading the right way will save you a lot of time and money. You don't want to be trading these outdated strategies in 3 months from now, 6 months from now, 1 year from now. The most important point to understand is that technical analysis, it's the first thing that everybody is taught in the market. There's no additional edge to trading that way. You really want to evolve your trading process and get to the next level where you're taking in a lot more information, data, statistics, market intelligence, the facts in the market. Further marry that up and compound that with the understanding of daily, weekly, monthly cycles in the market, quarterly cycles, the capital flows, intermarket correlations, key areas of liquidity. Further compound that with intermarket correlations, the ratios in the market, what the hedge funds, banks, money managers and institutions are doing, the key catalysts that will have the biggest impact on commodity prices, and of course understanding macroeconomics, real-time data and market intelligence. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click on the link below today's report in order to make an application to join our professional mentorship program.